U.S. stocks closed higher Tuesday, erasing the market's modest losses from a day earlier, with investors continuing to watch the big banks. Bank of America reported its earnings on Tuesday, beating earnings per share estimates by 4 cents and missing revenue estimates by $240 million. The bank closed with a gain of 0.13%. The Dow Jones Industrial Average closed at 26,452.66 on Tuesday, with a gain of 0.26%. The S&P 500 closed at 2,907.06 for a gain of 0.05%, and the Nasdaq Composite closed at 8,000.23 for a gain of 0.3%. On the data front in Germany, the ZOO Economic Sentiment Survey for April came in much higher than expected at 3.1%, as analysts were forecasting merely 1.9%. In the UK, ILO unemployment was slightly better than expected, coming in at 3.9% for February versus analyst consensus of 4%. On Wednesday, Asian markets were mixed despite strong economic data from China. The Nikkei 225 added 0.2% as its close loomed, with Shanghai up by a similar amount. The Hang Seng, ASX 200, and Kospi, however, failed to hold on to the green and were all down. The Chinese official gross domestic product rose by 6.4% in the first quarter compared to the same period last year, better than the 6.3% tipped by economists on average. Industrial production figures for March beat consensus by far more, and retail sales also exceeded forecasts. Industrial production jumped 8.5% year-on-year in March to register the fastest growth since July of 2014. Retail sales grew by 8.7% year-on-year, beating projection of 8.4%, while fixed asset investment in the first quarter increased by 6.3% year-on-year, in line with expectations. Market participants attributed the generally better than expected performance to measures taken by Beijing to support the economy. At the same time, the Chinese authorities are likely to introduce more supportive policies as uncertainties surrounding trade have not gone away. In Europe, stocks were trading in a mixed manner as the regional investors were not inspired by Chinese data. The regional Euro Stoxx 600 and the German DAX were mostly unchanged, while London's FTSE was a shade weaker as near 5% drop in iron ore prices hit its heavyweight miners. In bond markets, the U.S. 10-year Treasury rose Wednesday to 2.608% from a 2.592% on Tuesday afternoon. The German 10-year bond yield also climbed to 0.096% from 0.069%. Both have retraced almost all of their moves since a rush into safe assets in late March lifted prices and pushed down yields. The European Central Bank Governing Council member Yuval Nawatny said that the ECB is unlikely to cut the economic forecast in June. He also noted that it is not yet time for the Governing Council to introduce tiering on rates. Meanwhile, a German government official officially cut the 2019 GDP growth forecast to 0.5% from 1%. At the same time, the government expects the economy to rebound in 2020, and the GDP growth forecast for the year comes at 1.5%. In general, traders were prepared for such an outcome, but the common currency felt some downside pressure anyway as the euro-US dollar trimmed intraday gains after a brief spike above 1.13. In other currencies, the US dollar, Japanese yen briefly jumped above the 112.00 barrier during the Asian session, but failed to sustain the momentum as China-inspired risk-on sentiment continued to abate. Considering that the pair remains around the above-mentioned psychological level and refrains from a deeper pullback, traders are probably waiting for a catalyst to break higher and confirm the bullish bias. As for the data, the UK data showed a mixed picture. Producer prices rose 2.4% versus a 2.1% expected, while house price index saw an increase of just 0.6% after January's 1.7% jump. In commodities, Brent rallied to fresh November highs above $72 during the morning trading on Wednesday, and since then retreated below this level amid some profit-taking. Strong Chinese data reassured investors and pushed oil markets higher on easing concerns over global demand. Additionally, the API data showed that the crude oil inventories declined unexpectedly 3.1 million barrels in the week ending on April 12th. Also, OPEC supply cuts and U.S. sanctions on Iran and Venezuela continue to support oil prices. Moreover, according to tanker data, Iran's crude exports have dropped in April to their lowest daily level this year. In this environment, Brent may extend the rally on supply concerns even as the futures are looking overbought already. Gold prices extended losses for a fifth day in a row on Wednesday. The bullion has broken below key support levels, including the 150-day moving averages, which signals a further downside. The yellow metal held near a 4.5-month lows touched on the previous session as economic data from China tempered concerns about global growth, boosting risk appetite. World stocks inched higher after a raft of Chinese data signaled Beijing's recent stimulus drive may be paying off. Gold prices have fallen more than 5% since touching a 10-month peak in February and registered lows around $1,272, speeding up the decline after break below the 1,300 psychological level. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.